And Rahul Jain of Dolat Capital as well. Rahul, thanks so much for joining in as well. Results largely seem in line in terms of the top four financial numbers as well. Would you agree with that? And also wanted to start off essentially with the booking numbers as well. It looks like a very strong beat on that aspect as well, right?
Yeah, so from our number perspective, I think there is a slight miss. I would call it out from a revenue perspective. A slight better in terms of margin. To your question on deal signing, the number look exciting, especially on the large deal side. However, if you look at the guidance which they are suggesting for the quarter, I think it's kind of suggests that those advantage of TCV are not getting factored in the near future, and that is where something which make us slightly thinking about in terms of full year prospect, because the large deal which they recently announced, we were anticipating their number to be higher because of that, but it's a very long 10-year deal, so the ACV value is not that great, and that's why the number of value in terms of booking looks high, but the translation of that into the current quarter number is not exciting, resulting in a negative growth expectation that they are having for Q1.
Fair point, Rahul. And I also wanted to understand, because they've mentioned the guidance going forward, roughly about $2.5 billion. But when you look at the percentage, it translates into a sequential guidance of negative 3.5% to a negative 1.5% in constant currency terms. I just wanted to understand with your aspect as well, because this looks like a slightly weaker number, essentially in terms of guidance. What was the number that you were working with?
Yeah, our midpoint assumption was flat revenue. So we were more like thinking of -1 to +1 type of band. So that way it looks pretty weak. And as I said, our hope was more led by that large win that they already announced a few weeks back. But it seems that there is a lot of other pause and worry, which is probably causing them to think this quarter to be weaker, and it's been already highlighted by their clients selectively. And it's a big negative, because if you're having exit quarter being negative here in Q4, and then you start with, let's say, midpoint of what the guided band is, let's say -2.5% in Q1, it would be very difficult to recover from there to report a positive number for the full year. So I think this will be seen as a negative, and basis this, I think it would be very difficult to anticipate FY26 to be a decent year for them.
Stay on, because we also have Avinash Gorakshakar of Profitmart joining in as well. Avinash, Rahul is mentioning that it's a slightly weaker number according to the estimates. I just want to understand in terms of the top four numbers, revenue, EBITDA margin, EBIT margin, as well as the net profit. What do you make of these numbers?
No, I think these numbers were, in line with expectations. But I think, as you rightly mentioned, the outlook for quarter one, the kind of guidance, I think that is something the market should be quite disappointed. Because, even if the company were to report flat revenues, that would have been a matter of consolation. But I think, if you're talking about sequentially, 1.5% kind of, degrowth in constant currency terms, then I think it clearly portrays the fact that, I think clearly the US market is still witnessing a lot of headwinds, for IT companies. And specifically, if you talk about Wipro, they've always been weaker on the guidance, if you compare it with other companies within the, within the IT basket. So I think to that extent, my sense is these numbers are unlikely to, re-rate the stock. The stock has not, delivered in terms of very strong numbers, but I think that was an expected line. But I think now what comes out in the first quarter, and obviously how they maintain the, the momentum in terms of revenue and margin is going to be very critical. I think any kind of letdown on the revenue growth could have a direct impact on their margin. So I think, it's not a great number, but at the same time, market was expecting these weak numbers. But definitely, I think very difficult to say, now whether this will get re-rated in the next 6 to 8 months. I think markets would definitely love to have much more stronger numbers to get a re-rating here.
Got the view, Avinash, and stay on because let me go across to Rahul again. Rahul, we've seen the segmental performance of the company as well. We've seen the energy, manufacturing, and resource segment has gone up by roughly 40 basis points in terms of contribution, while it's largely flat essentially in terms of banking as well as the consumer names. Anything on the segmental performance that you're spotting right now?
Yeah, so I mean, for a very weak quarter, I think doing that segmental analysis does not help much because any which ways the net number is negative, which would mean that most segments would not have contributed. I think what we would like to hear is what they will give commentary here on for next year, because in US we have already seen the BFSIs reporting very strong record numbers, and at the same time their outlook on tech has been decent if you look at the BOFA release and stuff like that. And meanwhile TCS also commented that BFS is looking good. So those are kind of input would be more crucial. This quarterly movement in the segment, especially in a negative quarter, would not a much number to look into.
And Rahul, anything specific apart from the factors that you mentioned in terms of commentary that you're looking forward from the conference call as well?
So yeah, I think it's clearly the Q1 guidance which they are implying, I think, gives you that kind of a hint that they might talk about certain pauses or project ramp-up delays or something of that sort, because bookings are good, but irrespective of that, it's not translating into revenue. So any comments on those points is something which we would be more keenly watching out for.
Avinash, similar question to you specifically. I mean, I know that the numbers have just come out, so I appreciate both of you joining us. So specifically, Avinash, anything that you would be looking out for in this particular conference call, and anything in the result that catches your eye?
I think clearly, what kind of order wins does the company expect in the coming quarter, and I think what is the kind of margin outlook, because clearly, margin outlook maintenance is very important. If they can even maintain the same EBITDA margin, and obviously in terms of the incremental order book, what kind of order book is expected to come in, because that would give us a fair idea about what could be the run rate, for the coming financial year.
And, Rahul, you mentioned about the segmental performance as well. We look at the strategic market units as well of the company. The Americas one region specifically has just contributed 0.2% in terms of growth, while we've seen Europe actually have a 2.5% negative fall as well in this particular quarter. When you look at also the sectors, I think the highest one has been in healthcare, and that's been one of the key issues that's been pointed out by something like TCS as well. That amongst manufacturing as well as healthcare is something that's getting affected in terms of the order booking as well as the revenue in this particular quarter for all IT companies. And is that something that you're going across for the large cap peers specifically to see an impact there?
Yeah, I think commentary is going to be evolving in this quarter as well as in the upcoming quarter because of all this major turmoil that we are going through. Because please note that some of the commentary that management may highlight is basis their conversation that might have happened in the month of March, while most of the bigger action from a macro point of view has shaped up in last 10 days. So there is a good possibility that some of the impact, positive or negative, would mostly get factored in these upcoming guidance. However, if we also recollect from TCS commentary, I think barring for BFS, they were not positive on any space in particular, and consumer they turned fresh negative during the quarter. So I think that would be another area to understand how one should anticipate this, both from a geographical point of view, as you were mentioning, and also from an vertical commentary perspective.
Got that view, Rahul. And Rahul, thanks so much for joining in. Appreciate you staying with us. You were with us for TCS results. So thanks so much for coming in so promptly for these results as well as Avinash. Thanks so much for joining us for these results. So overall for Wipro, specifically we see that, while the numbers are largely in line, it's slightly disappointing as, both Rahul and Avinash pointed out. while the deal wins has been strong in this particular quarter, and that will be something that the management will be speaking about. We have the press conference scheduled at 4:30 today as well as the management call with the analysts at 7 p.m. I think the conversation is going to be revolving around what the management is seeing in terms of commentary with its clients going forward. Any kind of outlook in the Americas, one, as well as the two region. We've seen Europe also degrowing in this particular quarter. Some commentary aspect on there, but overall, while the results slightly, largely in line with estimates, and estimates weren't that great of just about a percentage in terms of revenue growth as well as margin revenue, profit was expected to just slightly be higher. It's come in at that level, but the deal growth and the pipeline that the company has not translated into revenue. That's the view from Dolat Capital as well, and essentially we are seeing that as well. So it's going to be very interesting with what the management has to say in the press conference. So do stay tuned to NDTV Profit, and that's going to come in at 4:30. But overall, results, slightly disappointing in terms of Wipro as of now. And on that note, we'll take a very